We're going to be breaking down the New York OTE strategy. This is a very simple and mechanical model. We are only using one time frame. Our three-step approach is to establish a low, find liquidity, and anticipate the retracement into our high probability zone during New York session every single day for consistent returns on any accounts. Make sure you guys watch till the end of this video to really understand this model and then start implementing it into your own trading to grow your small accounts. Coming into the marketplace here, our one time frame that we will be focusing on is the M15 time frame, as well as the pair that I'm going to be using this on is the Euro USD. This is one of my favorite pairs that I do like to trade, but this can work on any single pair from GBP USD, GBP JPY, but this is one of my favorite pairs, so we're going to be backtesting it on this pair itself. So if we understand the weekly profiling and the daily profiling of the marketplace, we understand London or Asia session will create the high or low of the day. So our goal into this strategy is to anticipate London session to create the low of the day, and then coming into New York session, anticipate that pullback into that London session range for the continuation to the upside or the downside. How we know if we're going to be going higher or lower is to understand where does the liquidity lie inside of the marketplace. If London session has established a low and we have liquidity above us in the marketplace, our job as traders is to anticipate that pullback into our Fibonacci range for that continuation to the upside into that liquidity pool. We can see by this first example here this morning of how well this strategy works. So coming into the marketplace this morning, we need to understand when should we be trading this strategy. We trade this strategy from 7 a.m. to 10 a.m. EST, Eastern Standard Time. You can change that to whatever your time zone is. That's when we typically look for this pullback into that continuation. First, we have to establish London session creating a low here. How do we know if London session will create a low? We have to find, has London session either A, taken out liquidity, or B, tapped into a level of support right after it tapped into a level of support or taken out liquidity? Has it then given a break of structure to the upside or the downside? In this case scenario, we can see the London session has not only swept the Asia session lows, right here this is Asia session, it swept those Asia session lows, but tapped into these prior London close order block. After it tapped into that order block or demand zone, whatever you may call it, we then see that push to the upside. So in this scenario, we can establish that London session has created the low of day. So now coming into the marketplace here, now our job is to look to the left of us and establish, is there liquidity lying above? As you guys can see, there is liquidity right up here. We have these prior weekly highs right here. So this is an area of liquidity that the market would want to see. So our job as traders now coming into the New York session is anticipate a pullback from swing low to swing high, and inside of that OTE range we'll then look to enter our position inside of either a fair value gap, order block, or breaker block, which we will discuss right now. So coming into the marketplace here for 7 a.m. this is when we start trading right here at 7 a.m. We anchor our Fibonacci from this swing low. This would then be classified as a swing low. When we have a low here that is lower than the low to its left as well as the low to its right, this would then classify as our swing low. So we're anchoring our Fibonacci from the M15 swing low points to the swing high points, and then we're getting our overall range for OTE. And if we can find some type of PD array inside of that level, we can then take our trade. So in this case scenario, we're looking for the most recent swing low to swing high points from the London session coming into the New York session open. So we can clearly see that this is the most recent swing low point right here to the most recent swing high point. So we're going to be looking into a pullback into the 50% level, 62% level, 0.705 level, and 0.79 level. These are all the Fibonacci levels: 50%, 0.62, and 0.79 with the 0.705 for the sweet spot. So if we can look to the left here and look for any PD arrays inside of these 4 levels, this would then be a high probability setup to then take the New York continuation to the upside into this liquidity pool. So inside the 50% level, as well as these OTE ranges, we can see that we have a breaker here in this area, which a breaker can be categorized as a low, high, lower low. As we break above this, now is the breaker, so price action finds support at this level for that continuation to the upside. This would classify as a breaker. So as you can see in this situation, we have this low, high, lower low. So as price action breaks above this, right from the highest wick right down to the body, and this would then be my bullish breaker. So as you can see in this case scenario, price action gave that pullback into that bullish breaker. We take our longs as it enters the high of this breaker, stop loss below the swing low. So as price reaches up into the 0% here, we could then move our stop loss up 5 points to lock in some profits. And then what we can do in this situation is we can put out our Fibonacci extensions. So we can put out -0.5 and -0.1, and whichever one aligns with the liquidity pool, that's where we're going to be taking our profit. So as you can see in this situation, as we take above this liquidity pool, we're in alignment with the 0.05, the 0.5. So we can put our take profit up here at the 0.5 above that liquidity pool, and this would then be our trade idea for a 5-to-1 R. Very, very solid. Let's go on to the previous day to show you guys some more examples. Coming into the previous day here, we are entering that New York session open at 7 a.m. and as we can see, we clearly have our range defined here. We can see that London session has came lower, took out the Asia session lows, and after taking out these Asia session lows, we see that break to the upside with liquidity above us. So we have this liquidity pool from the London highs plus the Asia session liquidities, as well as we do have prior daily London close liquidity and prior high of day liquidity. So overall, we have tons of liquidity above us. If we can get some type of pullback here inside of the New York session, we can then anticipate longs to take out all of this. So we anchor a Fibonacci from the low of the London session low, because it is the most recent swing low point, to the high here as the most recent swing high point, and we get our OTE range, the 50%, 0.62%, 0.705%, and 0.79%. So in this example here, what we do have here is this last down close candle as our high probability setup, which is this bullish order block. When we are dealing with bullish order blocks, which is near the low, right, as you can see, this order block is near the overall low, what we do here is we put our stop loss 3 to 5 points below that bullish order block. So in this instance, if we go from the low here, we would then go 3 to 5 points. So 3 points or 3 pips here would give me 1.08179. So this is where my stop loss would be, below the low, because what can happen is maybe New York session could take out this low and then see that push to the upside. So to be confident in this trade idea, right, just put your stop loss below 3 to 5 points, whichever you are comfortable with risking. So in this situation, we would then put our limit order here inside of the high here of this order block, stop loss below the low here, 3 pips below it, and then we would put our opposing take profit here right into prior daily highs right here. So this would be a almost 3-to-1 R trade, reaching back up into those prior London highs near the prior daily highs. And let's see what happens. You can see that we have reached down into that bullish order block. We reach a little lower, deep retracement into that bullish order block. Then we start getting to that push to the upside, and then finally we reach up into those prior daily highs. super solid, right? We've established a low in London session. We see that break to the upside. We have liquidity above us. So coming into New York session, we anticipate that retracement inside of our OTE range. We're finding that order block inside of that OTE range, stop loss below the low. We put it 3 pips below the low, but you could put 3 to 5 pips below that low. And then we were targeting opposing liquidity at a standard deviation. Super solid. I have recently launched my private mentorship here. First, we have the Market Maker Mastery for $15 a month, which gives you guys access to the Market Maker course, access to my pre-market analysis, post-market analysis, as well as trade breakdowns around the Market Maker model, as well as a private community for all members. Then we have the Academy here, which gives you guys access to beginner and advanced lessons, pre-market analysis, live trading, post-market analysis, and trade breakdowns as well. And you guys get access to my live trading for Forex and the index markets every single morning. Plus we have psychology lessons and my full risk management and trade management plan. Then we have access to all my market maker models and daily teachings of the market maker model. Then again, with the Market Maker Mastery, you guys do get access to the private community. Last but not least, we do have access to the Arkham seat at the table, which is weekly Zoom calls, answering your questions, backtesting with members, forecasting the marketplace, as well as psychology podcasts and teachings, advanced topics not taught anywhere else, learned from me, as well as this is only limited to 50 members. If that's something you guys are interested in, it'll be the first link in bio, as well as it'll be the first link in my Instagram bio as well. All right,